I noticed in my last several videos that I have a tendency to throw out these annuity terms, and sometimes I will use a different annuity term to describe the same type of annuity, and I may even do it in the same sentence. So I figured this is the perfect opportunity to create a thesaurus of all the different annuity types along with the acronyms that go with it. So note I did not say dictionary version. For the dictionary version, be sure to check out my videos as I have several videos on the different annuity types. By the end of this video, I'll give you the facts so that you have a better understanding of what the different annuity types are and what the acronyms for those different annuity types are. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit that notification bell so that you can receive notices anytime I post a new video. Okay, so I'm going to start off general and then I'll dive into the more detailed annuity types. So you've heard me reference a retirement annuity in probably almost all of my videos. So retirement annuity is an annuity that you will utilize in retirement. Now, are all the retirement annuities that I've talked about only available for retirement? Absolutely not. So an example would be a SPIA, a single premium immediate annuity that you can use to bridge an income gap prior to retirement. And a MIGA, or a multi-year guaranteed annuity, is a better option than a certificate of deposit because it offers higher interest rates over longer hold periods in addition to compound interest. So both of those are just examples of annuities that are not just used for retirement. Some other general terms that you've probably heard me use in my videos would include guaranteed income annuity and longevity annuity. So if one of the biggest benefits is guaranteed income, then it makes sense to refer to an annuity as a guaranteed income annuity. And if lifetime income, ensuring that you cannot outlive your money in retirement, makes sense for it to be referred to as a longevity annuity. Well, another annuity benefits is tax-deferred growth. So I've referred to an annuity as a tax-deferred annuity. And what that means is during the deferral period, you do not pay taxes on the growth of the annuity. And it doesn't matter what type of an account it's in. It can even be in a taxable account, and you still do not pay taxes on the growth of your annuity. You start paying taxes once you start receiving those guaranteed income benefits from your annuity. Now let's dig a little deeper and talk about immediate annuities or deferred annuities. So an immediate annuity meets income now needs and includes a single premium immediate annuity, also referred to as a SPIA. It is based on a fixed interest rate, which means it's also a fixed annuity. So what happens with a single premium immediate annuity is you put in a lump sum payment into that annuity contract. And within a year, you start receiving those guaranteed income streams. Now, a deferred annuity meets income later needs. And there's actually two different types. There's the fixed annuity based on the fixed rate. And then there's a variable annuity where you actually invest in mutual funds. They both have deferral periods, and the deferral period can go up to 45 years. Leave me a comment in the section below and let me know what terminology you have heard to describe an annuity. And keep in mind, there's more to come. Also, if you enjoyed this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit that notification bell so that you can receive notices anytime I post a new video. For the remainder of this video, I'm going to talk about a deferred annuity. And I mentioned that there were two types, a fixed annuity and a variable annuity. So I'm going to talk about the fixed annuity. So first one I'm going to talk about is a deferred income annuity, also referred to as a DIA. Is similar to a SPIA in that it is a fixed annuity and it is based off of a fixed interest rate. You can defer it or cook it for anywhere between 13 months and up to 45 years. And the longer you cook it, the more guaranteed income benefits that you will receive from your DIA. So this makes an excellent retirement income planning tool. Now, if you want to add some tax planning to it, then you may be interested in a qualified longevity annuity contract, or also referred to as a QLAC, which is a direct cousin to a DIA, or a deferred income annuity. So the IRS requires you at the age of 72 to start making required minimum distributions from your qualified account, such as your 401k or your traditional IRA. And just so you know, if you don't make those scheduled required minimum distributions, you'll be penalized 50% of your required minimum distribution. Now, if you have a qualified longevity annuity contract in a traditional IRA or a qualified account, then you can actually hold off on those required minimum distributions up to the age of 85. So that makes a pretty powerful tax planning tool, doesn't it? So a multi-year guaranteed annuity, also called a MYGA, has become increasingly popular this year. And that would be because it offers higher interest rates than certificate of deposits over longer hold periods, and also provides compounding growth. So it also is a deferred annuity, and you can defer it right now terms between 2 to 7 years, but it's also a fixed annuity because it is based on a fixed interest rate. The last deferred annuity that I want to address in this video is the fixed indexed annuity. So since it offers an option for a fixed rate in addition to a minimum guaranteed interest rate, which is pretty much your fixed interest rate, it's also a fixed annuity. But a fixed indexed annuity, also known as a FIA, also offers call options on market indexes such as the S&P 500, where you can actually receive or get credited a portion of the market gain from the market index. So just note that you are not directly investing in market securities with a fixed indexed annuity, nor market indexes, but rather you are credited a portion of the gain from the market index. Now I keep saying a portion because those gains are capped in order to provide you 100% downside risk protection. So yep, there is a 0% floor. The fixed indexed annuity is an asset in of itself, but you can obtain an income rider for an annual fee that will provide you guaranteed income. And if lifetime income, then you're going to ensure that you cannot outlive your money in retirement. If you're interested in obtaining a fixed annuity in your retirement portfolio, whether it be a deferred annuity or a immediate annuity, be sure to click the link below to apply to become my client. Also, if you enjoyed this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and share it with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.